Wake up! Enrich your clients, enrich us, enrich yourselves. So look at the guy or gal next to you. Do you think you're better than them? Maybe you are, but half of you won't be here in 6 months.
Let's talk about finance lessons from the first episode of Industry based on my experience at Goldman Sachs and at the top hedge funds in the world. And this will help you decide if you want to work at an investment bank or how the finance world works. Please like, comment, and subscribe, and stick around because at the end of this video, I will grade the episode for Wall Street Realism with a buy, hold, or sell rating. Now, here are the employees and their roles in the first episode. We will discuss these characters and what they do in this video. And this bulge bracket firm Pierpoint is an investment bank similar to Goldman Sachs or Morgan Stanley based in the United Kingdom. Now, an investment bank is a sell-side firm that has many divisions, including a trading floor where these employees work. And their job is to talk to the buy side. Okay, the buy side means a person like this one here that works at a hedge fund. This sell-side investment bank helps buy-side clients make money by pitching ideas over the phone to buy-side clients. Now, if the idea is good, the buy side, for example, a hedge fund, trades through a trader on Pierpoint's sell-side trading floor and pays them a commission. Now, the salespeople on the trading floor, like Harper here, what they do is they pitch their own ideas. And they even use the ideas from the investment bank's research analysts like Theo here. Now, per these three employees here, the investment bank also has investment bankers. And their role is to help companies do IPOs or do mergers and acquisitions, for example. And most of the profits at many investment banks are made by investment bankers, which is why they often make much more money than other employees at the investment bank. Lastly, investment banks are highly regulated and have compliance departments. Now, let's learn about how an investment bank works by discussing episode 1 of Industry, starting with the job interview to get hired.
How many of these have you had?
9. 4 in New York, 4 here, and Skype.
Accurate. And you usually go through at least 10 interviews to get into top investment banks. And at firms like Goldman Sachs, it can be as many as 40 interviews, which is what I went through at Goldman. Now, my son, who works in investment banking, has told me that the initial online interviews, or what they call hire views, are often done now using Zoom and also using AI to make sure that you use certain keyword responses like teamwork, etc., in the initial screening interview. Let's get back to Harvard's interview with a managing director named Era.
I think this is the closest thing to a meritocracy there is. And I only ever want to be judged on the strength of my abilities.
And paid for it.
I guess.
Not accurate. Meritocracy means you eat what you kill, which might work at a buy-side firm like a hedge fund, but not in a sell-side interview where teamwork is really important. Now, if you want, pause me to read what 14 keywords or business principles companies like Goldman Sachs look for when interviewing. And check out the perfect body language from this next clip. This is an investment banking interview with a candidate named Gus.
Where do you stand on them?
One's the reason we're all here, and the other's a carpenter.
Now, when interviewing, body language is key, which this investment banker has. Now, a slight smile and not a closed posture works really well. You got to be open. And also eye contact is crucial with the interviewer. Now, here's a little hack. When doing a Zoom interview, what you got to do is you got to draw a little happy face here and stick it right beside the camera, and this will make you happier in your interview because you never get a second chance to make a first impression.
I didn't realize that we recruited from SUNY Binghamton.
It's a non-target.
Accurate. Top investment banks tend to recruit from top target schools like these schools you see right here. But don't worry, if you didn't get into one of these schools, you can still get a job there by networking, and I can help you. See the link in the description to set up a call with me.
It's my pleasure to congratulate you on this placement. The work to stay here starts now.
6 months' time on Rift Day. That's reduction in force. You'll be standing in this room telling all of us why you should be hired permanently.
That's not accurate. Out of undergrad, it's not 6 months. It's often a 2-year analyst program. Then it's up or out. Now, these 5 employees in the orange circles on the bottom just got hired for a 6-month contract. Now, if they're good, they stay. One of these 5 dies on the job in this episode, which I'll explain very soon.
Enrich your clients, enrich us, enrich yourselves. So look at the guy or gal next to you. Really look. Do you think you're better than them? Maybe you are, but half of you won't be here in 6 months.
Accurate. When I did the training program at Goldman Sachs, partners like Roy Zuckerberg, I remember this well, and others said or implied the same thing during the training program. Then we were all fingerprinted and told, don't ever do anything that gets our firm on the cover of the Wall Street Journal. Let's now discuss the jobs of these three people who all sit on the trading floor, which looks like this here.
You don't look sure how to navigate that.
Now, here's the phone system, and here's Bloomberg, which is kind of like finance.yahoo.com with more real-time stuff and with a messaging system. And Bloomberg can cost a couple $1,000s per employee per month. Now, you eat breakfast, lunch, and sometimes dinner at your seat. And she's very lucky as her boss is cool, unlike this dude whose boss is a prick.
Sure, I can't get you anything. Is there anything you want looking at? Guess we're the only people that like to have fun around here.
So when you're new on a trading floor, some people ignore you if you're new and you can't add value, but they don't respect you if you're a kiss ass, and neither do your peers.
Oh! We just do that before you embarrass yourself in front of your peers.
You see, what you've done there is actually erect a billboard to how gauche you are.
Yeah, nice one.
Robert wears Ted Baker, ladies and gentlemen, just so you know.
I think you look great.
Now, I wear Ted Baker. It's not that bad. Now, I've never seen anybody wear a black suit on a trading floor. And historically, you get hazed a little bit more on the trading floor in some firms than investment banking, which we'll discuss very soon.
Hey, ask Rishi for the level of one-year Euro swap and 500k DBO1.
Don't call me promiscuous.
Rishi,
Grass is the past.
can you send...
Relax. I've just sent out my runs. They're on your Bloomy. You can sit down now.
Accurate. When you're new and not yet adding value on a trading floor, often you aren't respected. Now, let's explain what Harper asked sales trader Rishi per this on-screen text. Now, this is an interest rate swap that has a 1-year duration. And buy-side clients like hedge funds, they buy interest rate swaps as a way to hedge their exposure to interest rates over 1 year. For example, let's say a hedge fund has an investment in a bank, and they're really worried that if interest rates change, they could lose money. Well, they can set up a trade to protect themselves if interest rates change over the next year. Now, the 500,000 DVO1 means if interest rates change by 1 basis point, meaning 0.01%, then the value of the interest rate swap changes by 500,000 euros. And per this graphic, we see that Harper's job is to sell financial products that deal with interest rates, debt, instruments, and derivatives. Now, derivatives include these types of financial instruments that go up or down based on the rate of change, which is what derivatives from calculus class means. Now, the global derivatives market is 6 times bigger than the global stock market because companies transact a lot to protect themselves when interest rates or commodity prices or other stuff changes in price. Lastly, sales trader Rishi, who executes trades, mentioned sending a message over Bloomy, which means Bloomberg.
I still don't have your university transcript.
I'm really sorry. I will get on it.
You said that last week.
Not accurate. Justin from compliance would do thorough background checks on Harper before she joined the firm. Enough about sales and trading, meaning Harper's job. Let's now talk about Harper's friend that works in IBD, meaning the investment banking department.
Don't try to figure out how much you get paid by the hour in IBD because I will guarantee you it is less than minimum wage.
That's not completely accurate. Yes, investment bankers can make much more than people on the trading floor, but they often work up to 100 hours per week, meaning they make less per hour, as people on the trading floor often work Mondays to Fridays, maybe 10 hours or so per day, and sometimes a little bit longer during quarterly earnings season. Let's check out the comeback from this dude that works in investment banking.
The way I see it, I'm in the ivory tower upstairs. You're down here on the floor with the peasants.
Now, bankers wouldn't say peasants, but they do think that they're above every other job function in finance. Now, why do people want to do investment banking, and why is it a smart place to start a finance career? Well, investment bankers, what they do is they originate the IPO product, like this Facebook prospectus from 2012. And here at the bottom of the S1, you see which investment banks were on the syndicate. And investment bankers also do M&A, meaning mergers and acquisitions. Now, if you hate your job in investment banking, that's cool because you know how to originate, meaning make the product. And if you know how to make the product, then you have an advantage because you can get a job investing in the product, like at a hedge fund or at a private equity firm where you can make much more money than investment bankers do.
You've been here for 3 weeks and you've barely said a word to me.
I'm sorry, I've just been underwater, backing up Eric's accounts.
I know we both work for Eric, but I'm your line manager.
Yeah, so when you join a company, in the first 2 weeks, meet as many people as you can. Kind of like how all of your friends today, you literally met in the first 2 weeks of high school or undergrad. You're the new kid in town, and your network is your net worth. And you need these relationships because big companies, especially banks, man, they overhire and they overfire, meaning they cut into muscle and not just fat. And you need a plan B, and you need many mentors, and only the paranoid survive. Now let's talk about a day in the life of an investment banker.
Are you that thirsty?
Oh, you know, we got a 30 quid meal allowance. Like, why would you not use all of it? How's your model?
We'll finish it in the morning.
Send it over my way.
Accurate. At top finance companies, you have a great expense account as they want you to work all day and often all night in investment banking. Now, Hari mentioned, how's your model? What he means is a financial model like this one you see right here that I used to teach my students. Now, bankers create models to forecast what a company should be valued at when it IPOs or what a company is worth in a mergers and acquisitions deal. And you'll notice that Hari said, send me your model. Now, there's a lot of co-opetition in investment banking, meaning cooperation and competition, and you're often swimming with the sharks given the up or out incentive structure.
You're bouncing. Hey, man, hey, it's only 10:15. No one here is actually going to tell you this, but you need to put in FaceTime.
That's accurate. You need to be FILO, F-I-L-O, which stands for first in, last out. Now, I hate FaceTime, but it is what it is. Get to work before your boss and leave after your boss does. Or schedule emails to be sent in the middle of the night. Just kidding, sort of. No, but in all seriousness, one of these guys dies on the job in this episode, which I'll explain soon. Now, if you're really good at what you do, FaceTime matters a lot less.
Why have you changed the WACC?
The DCF was coming out too low.
Well, how does it compare to the transaction comps?
These pre-profit unicorns trade on crazy multiples, 8 times, 9 times. This liquidity discount would be just over the DCF.
Fantastic.
Accurate. Now, what just happened was sort of unethical. It's borderline. Bankers use DCF, meaning discounted cash flow, as you see here, to value companies. Now, if you want a company to be worth more when you discount the future annual cash flows the company is expected to make, then you use a lower interest rate, meaning a lower WACC or a lower weighted average cost of capital. Let me explain this. Okay, so if I give you $100, okay, and I tell you that the interest rate is 10%, then in 1 year, you will have how much? Meaning, what is the future value of $100 at a 10% interest rate in 1 year? That's right, $110. And so the formula is here for the future value. Now, let's rearrange this to find the present value. So the present value of the future of $110 at a 10% interest rate discount to today, present value is $100. Now, how do I make the present value higher? Well, what if I assume that the interest rate or the discount rate is now 5%? And we see right here, what happens is the present value is now higher. And discounted cash flow, or DCF, is the same thing, except you discount several future value cash flows until today. Now, let's add another layer here. The discount rate is the WACC, meaning weighted average cost of capital. And you often raise money through debt or equity. And the weighted average cost of capital is a discount rate that calculates what a company's cost of equity and debt is. Now, the riskier the company, often the higher the WACC, meaning the higher the discount rate. Well, what is a company worth? Well, it's worth what similar companies are worth. Let's revisit part of that clip again.
Well, how does it compare to the transaction comps?
These pre-profit unicorns trade on crazy multiples, 8 times, 9 times. This liquidity discount would be just over the DCF.
Fantastic.
All right, so unicorn means companies valued at more than $1 billion. And the unicorn comps, meaning similar companies, in this case trade at 8 to 9 times revenue. Why do you look at a revenue multiple? because the sector is high growth and likely has very little, if any, earnings or positive cash flow yet. Now, investment bankers value companies using a couple of different valuation methodologies just in case one valuation methodology is way off. Then what they do is they take the average target price of 3 or so valuation methodologies, and then you minimize the margin of error. And by playing around with the discount rate, meaning the WACC or the weighted average cost of capital, you can come up with the right valuation for the company you're trying to value. Now, the bankers are likely trying to prove that the company is massively undervalued so they can do the IPO at roughly a 30% discount to fair value, or to justify a larger company to buy the company they're doing research on so the bankers can make a lot of money on fees. Lastly, when the banker mentions liquidity discount, it means the company is likely private and doesn't trade on an exchange. Therefore, it should trade at a discount because it is not liquid, meaning you can't quickly buy or sell it.
What's that?
That's my model.
Why are you doing the model? Gus is doing the model.
I had capacity. I just wanted to get ahead.
Sorry, I told you to do the pitch book. So do the pitch book.
So she is brutal, but this happens a lot. Now, there's a lot of pressure and always an aggressive deadline in banking. Now, a pitch book is often a PowerPoint presentation or a Word doc, in this case, where you're pitching to a client in the hopes of getting the client to hire the firm for an IPO or for M&A advisory work.
Fish, stick to the formatting. And for f***'s sake, make sure the font's Helvetica 12 or the MD will freak.
This is accurate. As stupid as this sounds, if the font and font size is not perfect, management freaks out. And I knew a guy, this is funny, I knew a guy that graduated from Harvard Business School and he worked at Goldman Sachs in investment banking, and his managing director drove him crazy with tiny PowerPoint updates. And he told us that if my MD makes me move this circle on this PowerPoint slide one more time, I'm going to quit. And he did. All right, let's talk about the morning meeting before the market opens for salespeople that work on the trading floor.
So I've published a piece looking back at the decade post-crisis.
How are we supposed to monetize what's in the rearview mirror? Any new buy recommendations?
Still overweight with a preference for the US.
Accurate. This dude is a research analyst, and his job is to tell salespeople, like these people here, what investment ideas to pitch to their buy-side clients over the phone, like hedge funds. Now, if the idea sucks, the clients don't trade through the sell-side trading floor, which means the trading floor doesn't make commissions. And here you see the research report on salesperson Harper's screen. Let's now talk about Harper's first dinner with a hedge fund portfolio manager.
Right, priorities. Shall we get some wine that doesn't taste like paint thinner? Absolutely.
So if you work on the trading floor, there's a lot of whining and dining, as relationships are often more important than product knowledge, and it can be really depressing as you feel like you're getting paid for being a drinking buddy and not for your intellect. And I want you to be careful with alcohol on the job like this here. I would often order a Sprite so it looked like a gin and tonic.
Buy an option on the US 10-year at 4%.
Sorry, Nicole, graduates don't normally pitch.
That, let her talk.
Accurate. This is gutsy, pitching a client on an idea when you're a rookie. Now, before I explain her trade, let's first quickly discuss how US interest rates work. Okay, and I've got a couple of props here. So I want to pretend that I am the Federal Reserve, okay, which is like the manager of the store of money. And you are all banks. Now, in my hand here is a treasury bill. And if I want to raise or lower interest rates, what I do is I sell or buy this treasury from you. For example, if I, the Federal Reserve, sell you this treasury bill, okay, you give me your money. I then take this money out of circulation. And when the supply of anything goes down, then the price goes up, meaning interest rates go up. I, the Federal Reserve, change the price of interest rates in the short run for like less than a year. Then the market decides what the interest rate will be in the future, meaning in the long run, like in 10 or 30 years or so. Let's quickly build a yield curve so the interest rate stuff is easier for us to understand. Now, if we go together to treasury.gov and we click on data, and then daily treasury par yield curve rates, and we select the current month, then we see the current rates which the Federal Reserve sets. Then we see the future rates in 10 years, 20 years, or 30 years, which the market sets. And right here we can build a yield curve which implies that in the future, the economy will be better or interest rates will be higher. Now, the Federal Reserve controls short-term rates and the market controls long-term rates. Now, Harper said buy an option on the 10-year, which means make a bet that the 10-year rate will change. Why is that?
With the president bulldozing the reputation of U.S. overseas, the administration will totally kill the rep of treasuries.
And pissing in China's mouth isn't going to help.
Exactly. Personally, I just think we're due an enormous sell-off.
So Harper is saying that China will start selling 10-year U.S. debt that they own. And since bonds and yields, meaning interest rates, are inversely related, then if the price of the 10-year goes down, then interest rates on the 10-year will go up. And when this episode was filmed, actually, rates on the 10-year were below 4% versus above 4% today.
We're low-key throwing ourselves in cold wars with all of our trading partners. China are the biggest global holder of U.S. paper. If they start dumping, yields will soar past 4%. If you think the house is burning down, this is how you monetize it.
Now, when this episode was written, China was the largest holder of U.S. debt. Now it's Japan, as China has been selling.
I don't think you're a saleswoman. That's a compliment. Salespeople sell certainty.
This is accurate. Salespeople on trading floors often don't take risks with pitches. Now, the buy side often arrogantly looks down upon the sell side, and they think that they're not smart enough. And a lot of people start on the sell side, but their ultimate goal is to get to the buy side where you can make much more money than even investment bankers at the right hedge funds. Now, this next scene is really disturbing.
Harry's death is an unexpected tragedy. The next 24 hours and the way we respond to this are defining. Do not speak to the press. I'd rather you didn't speak to anyone outside of the office. For now.
So I know people that have passed away from substances. Of course, don't do it. And you don't know what's in the stuff if you buy it. And I worked with a person on my floor that died, not at Goldman Sachs, but at a hedge fund. And I don't know why investment banks can't just hire more people and let them work fewer hours. Now, for mental health reasons, and I say this with love in my heart, please take one day off a week no matter what. Now, how this woman still has a job beats me. Separately, if you want a good night's sleep in finance, never do this.
So the only reason you're calling me is that you want a fake transcript. You must need it pretty bad.
Now, I promise you that you will get caught. And unfortunately in finance, the following is true from the best finance movie ever.
There are three ways to make a living in this business. Be first, be smarter, or cheat.
Now, I put a link to my video review on this movie, Margin Call, in the description. It's a great movie. Let's get back to the episode with a crucial sales tip.
Daria said the Malin Mercer meet went well. Monetize that.
She sent an email.
We don't hide behind emails. Get on the phone and ask for the order.
Accurate. Closed mouths don't get fed. If you want to get paid, ask and you'll receive. And the only reason your competition makes more money than you do is because they ask more often. Ask for the sale over and over and over again, rinse, lather, repeat. Just like how you never get promoted unless you ask over and over again.
Hello.
Nicole, hi. It's Harper from Pierpoint. That option idea we talked about?
Let's go for it.
Rishi.
Call it again.
Rishi.
Yeah, I'll call it.
Rishi, I said your name, dude.
Closing a sale is one of the best damn feelings in the world. And I love how Harper stood up for herself and was aggressive. She bullied Rishi right back. Now she's respected. And I love her boss, Eric, as well.
Do not forget how this feels right now. You are a world killer. Now I see you.
Now, thinking you're a world killer is up to you as perception becomes reality. And just like the Rodin sculpture, I think, therefore I am. Whether or not you think you can do it, you're right. And don't let anybody rent space in your head, please. And just like Harper here, you celebrate your success. Get a taste of it. And as Napoleon Hill wrote, think and grow rich. And remember that unjustified criticism is a disguised compliment. Also, when you work in finance, remember, don't let the bastards get you down. Let's talk about grading of this episode for Wall Street Realism with a buy, hold, or sell rating. Now, I'm blown away by the accuracy of this episode when it comes to the pros and cons of working in investment banking and on a trading floor. Now, the interview process was more or less accurate, as was the pressure of working in banking and in sales and trading. And the personalities of all these characters was so on point and incredibly well researched. Now, the only main inaccuracies were the unfortunate death of a banker on the job, which is a very rare occurrence. And also, instead of a 6-month contract for new hires, it's usually about 2 years. Now, despite these inaccuracies, I have to give this episode a buy rating. Please like, comment, and subscribe, and I will see you soon in my next reaction video to episode 2 of season 1 of Industry. Thank you.